Podcast, Part 2, Episode 2. Again, disclaimer, anything I say in this video is not financial advice. It's not to be taken as financial advice. This is all for fun. This is all just basically to create a podcast and to talk about something that I'm really interested in. So don't do anything that I'm doing as financial advice, because I'm not a financial advisor. I'm not an accountant, CPA, or any of those type of financial experts, if you want to call, or a financial analyst, whatever. I'm not any of those guys. So anything I say that has something to do with me buying a certain stock or buying this, that is not financial advice to go out there and go do that. Okay? If you go do that, that's on you. It's not on me. So that's just my disclaimer. Now we're going to get started. So welcome to the Knowledgeable Podcast, where we're mostly going to be talking about finance, and then maybe when we get bigger, we'll probably talk about more things. So to get started, let me get back to what I was talking about yesterday, which was basically about NVIDIA and why I thought it was overvalued. Now, I talked a lot about how it was overvalued, why I thought it was overvalued, but I think it's overvalued for a plethora of reasons. For instance, like I said yesterday, there's a lot of inventory problems that it has. Okay? The inventory problems that it has, for instance, is that it's not that it's not, people are still buying it, but their inventory is going way, way, way up. Okay? So when I look at that stock and I say, oh, that's a really great stock to buy, it did have a head and shoulders pointed down, which basically means we're going to go up like that. It was basically a boom, 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 boom. So it made sense of why it went up because of the technicals. I didn't realize that until a couple days ago. But should it still be going up? No. There are some bullish trends where there's a certain you can make a boom, boom, boom up, boom, boom, boom up. So they're making lower highs. Lower lows, but they're still going up, right? I think I said that right. Correct me if I didn't. So they're still going down, but they're making higher lows, right? And their highs keep going up. So higher lows and higher highs. So it's still in a bullish trend. The problem is that I think, and a lot of us kind of think that it's doing a topping tail. Now, there's some group of us that do believe that there's still room for it to go up to over $300. It's definitely possible. Anything is possible in the stock market. I mean, tomorrow the entire summer could collapse. Will that happen? I doubt. I mean, the stock market will never go to zero, unless the only way is if we're all dead, and even then, it still wouldn't go to zero, because there would still be money in it because we'd be all dead, right? Now, after a while, I'd probably just go to zero because there's no one using it. But, that's just some of the stuff that is involved with the stock market, for instance. So the stock market is never going to go to zero because there's too much money in it. Unless we're all dead, then maybe, but even then, it's very plausible. It'll be at 0.0000009. And I don't consider that zero because it still has a 0.00 something, so it's not zero yet. So it's not 0.0. Done. See ya. Bye. So, it's not zero. Could individual stocks go to zero? For sure. A lot faster than the entire stock market, of course. because there's just so many companies. Apple could go down faster than the entire stock market could. Will it pull the stock market down? Of course it will, because it's the largest stock in the entire um, realm of stocks in a lot of the indexes like the S&P 500, the NASDAQ 100, Composite, etc. So, you know, investing and trading are not the same thing. Okay, if you're trading, and being a long-term investor is someone that at least holds their investment for over a year. I have never done that, so I guess you can consider me a trader, I guess, if you want to say. Am I good at trading? No. But I think I'm getting better than some regular Joe on the street, okay? Which doesn't mean a whole lot. It means that I'm not good. But I think that the way that the world is, I mean, if you look at what the dollar in March, the yuan actually had a bigger gross, or a bigger usage, I should say, in the value of how much it went up. Like it went up loads amounts. So, excuse me, the usage of the yuan is actually larger in March, which is the first time ever for the yuan to be bigger than the dollar in usage, ever. So that's not good for people that live in America. Why that isn't good is because America, let me explain something. America uses the dollar to keep control over the world, okay? So every other country besides America has to use the dollar, has to take their own currency, and when they want to buy or trade, they have to trade their currencies and convert them into dollars just to buy stuff, which makes them poorer because they're not using their own currency to buy things besides the dollar. So that's why we are so lucky. And that's why a lot of these other countries have so many problems. But I think that's going to change. And China running that system, I don't really think are going to be any better than us. So I don't know why these people are just trading in yuans. Like, yuan isn't stronger than the dollar. So now, can it? Of course it will. Of course it will. But it isn't stronger than the dollar right now. Now, they have a lot of gold going towards it. I think the Fed's buying a lot of gold. I know China is. China's been buying, and Russia have been buying loads of gold. That's why the ruble's way up. And I think it's part of the reason why it's way up. I don't think it's the full reason. Russia's economy was about to collapse, but since Russia is getting their oil bought by the Chinese and the India, their economy is going to probably be stable for a little bit because they have the capacity to grow their oil reserves. Now, I'm not going to get into the Ukraine war. That's a whole other situation, and I'm not going to get into because I think that creates too much contention between people, so I'm not getting involved in that. But I will get involved with talking about economic stuff that could cause and make us have problems, but I'm not going to get to a war because I don't like war. So, that's all I'm going to say about that. People will say, oh, it's good for the economy. Yeah, it's good for people that are rich, that make money off of war, sure. That cheat and lie and steal to make money off of war, sure. That's real good. I'm being sarcastic, but as you probably could tell. But to be honest with you, our entire economy as a system is being controlled at our certain pace, by people that, again, have been in power for many, many generations. Again, I'm not going to get into that. So we're going to go back to stocks because I think I went a little bit on a rail train, like I usually do. Sorry about that. But going back to stocks because I think I need to get back to that. We talked about NVIDIA for a while, and I explained my thesis on it. Maybe it's a good one, maybe it's not. I don't know. But I'm just going to say one more snippet about the inventory, and then we're going to move on. So the inventory problems are that their inventory is going up, so they're not selling as much, like I was explaining yesterday. And if I didn't explain it clearly enough, what's going to happen is their margins are going to keep going lower because now they have to figure out ways to sell that, and they're going to actually have to lower the price of them to sell those goods, which will lower their margins, which will lower their revenue, etc., which will hurt them. And like I said yesterday, I was watching video yesterday morning, and a guy actually pointed out that their debt is actually going up. And yeah, it's not a whole lot considerably from like AT&T or those type of companies or Ford or etc., but it's still going up. Can they handle it? Probably, yes, because they make a lot of free cash flow. But their free cash flow has also been going down somewhat. Not every year, but somewhat, which is a little bit worrisome. So for me, if you're a long-term investor, would I buy it at $290? No, because I think you can get a better price. Now, if you're willing to wait 10 to 20 years, it would be an iffy one. Because NVIDIA, to me, is not worth $700 billion. I don't think Apple is worth $3 trillion or $2.75 trillion. Could it be worth $2 trillion? There's probably a debate out there that they could be. And there's someone that probably could debate you that they're worth $3 trillion. Are they? No. I think $2 trillion for Apple is probably a good price because, again, they're in the stock market. They're the largest company on the stock market. So that's going to bring more value to the stock. They make loads and loads amounts of money. So that's also going to bring more value to the stock. So are they overvalued? Probably. Yeah, but Apple's different than NVIDIA. Okay, NVIDIA is not the largest company on the stock market. It shouldn't even be in the top 10 of largest companies in the world. Let me just tell you that, because me being nice, they possibly, with growth in mind, did $300 billion as a market cap, and right now they're at over $700 billion. That means that they have to go over half, cut their market cap by over half, just to get back to still being overvalued at $300 billion in market cap. That's me being nice. Like, I'm not joking. When your book value, and like I explained yesterday, was $8 and some odd cents per share. Well, okay, like I said, you put it on the stock market, it is going to be probably higher than the book value. So we'll say 26 to 50, and then growth in mind, 100 to 120 is probably the range that you're going to want to buy it at. But not at 150, maybe. 200? No. Okay? The company isn't worth that. The company isn't even worth $300 billion. The company isn't even worth $100 billion. Okay? 50? I would definitely buy it at $50 billion. The company right now, I think a lot of people would. If they're buying it now, a lot of the stupid guys wouldn't buy it. But people like me and I'm not saying that I'm smart at all. I don't consider myself a smart investor. Not even an investor. I wouldn't even consider myself an investor. But a guy that I think is smarter when it comes to companies compared to their values, at least. If I really want, for instance, and I predicted Netflix. Now maybe I got lucky there predicting Netflix. I didn't invest in it. I didn't trade it. I basically said that it was going to go all the way down to 70 to 80 billion. And then I changed my forecast to about 50 if you're lucky. But they got close to the $80 billion in market cap. I don't remember what the date was, but I did get that one correct. If I wouldn't put my money into it, I would have made a crap load of money. Meta, I got Meta. at a certain price, and I said that will go down to, I don't know if I think I predicted the price. Yeah, I predicted the price with Netflix. I think I predicted the market cap for Netflix. Meta, I predicted the price. I said the price would probably go around 150 to something, and it went to like $80. I should have bought it at 80. I already had it at 180. Why didn't I buy it at 80? I don't know. I was a clown. If I would have bought it at 80, I would have made all this money. Even with that other 180, would have cut it probably in the middle, which would have been, I'm not good with math, without doing the calculation, whatever that middle is, which would probably be $116 or something weird, or maybe probably 126 or something, whatever. That's what I would have been at. And I would have made all this money going up. And it's already at $230. But I didn't. I sold it at $196, got out, made 3%. I could have made 27%. Even me being at $180, I could have made 20%. But I decided to get out because I was in it for a couple months. I was in it for a while, and it was going way up. And I was like, this thing is making this huge up. And it was undervalued. It was undervalued at 80. Why I didn't buy it was because I was scared. I wouldn't buy it now. I think their company is interesting to buy. Don't get me wrong. I think Mark Zuckerberg has changed a lot, but hasn't changed enough. But I am not an investor in Meta or a trader right now. If the market goes back down, I don't think you will see Meta back at $80 unless the market literally tanks. And I mean like literally tanks. I don't mean like, goes to 3,900. No. I mean like it goes back down to like, 2,500 or something crazy. That may be, and even then I don't think you would see it. I think where Meta goes is probably, $150 is probably the right correction. But again, it's going to be iffy because Meta, could go a little bit lower. I don't know. I mean, Meta's Meta. Meta may not go down that low again because they've been up. I mean, look at NVIDIA. It was all the way down to 108 and hasn't even touched, hasn't even touched 150 in a while. So I do think NVIDIA goes back down. I do. I really do. I just think it's a topping tail. I think what Apple's doing is just another topping tail, just a lower high, and then we're going to go, because it did it in August. I think that's what's going to happen. And be honest with you, oh well, I said a couple months ago in December that the NASDAQ, I looked at the NASDAQ chart and I said, the NASDAQ has a lot to go up. If I would have bought crap, I would have been totally correct. I would have made, probably like 5, 6, 7, 8%, but I was an idiot and didn't do that. Okay? That's what happens. I don't listen to my own advice. It's dumb, right? It would have probably took me a couple months, but sure, I would have been able to make a lot of money doing that. But my thesis is still short ETFs until we get past that August high. Then I may rethink things. But as of right now, we haven't even got close to we have gotten close to it, of course, but we haven't touched it yet. There's a lot of turmoil. I think we're kind of in a sideways realm for a little while until there's something big that comes out. The regional banks, I do agree with some guy named Mike Jones. He was saying that the regional banks are really interesting to invest in. Sorry, I didn't mean to say to invest in. Sorry about that. Do not invest in regional banks right now. There's probably some that you could be interested in, but I still think there's a lot lower they're going to go, so I would not touch them right now. Again, nothing I say here is investing advice. It sounds like it, but again, I'm just doing this for fun. So do not do that. I'm just talking out loud. So don't do that because some Joe like me told you to go out there and buy, a regional bank stock. Do not do that. I wouldn't invest in a regional bank stock, at least not right now. I think the regional banks are going to have a lot of problems still. I do think the big banks are shorting it, and they're also affecting the regional banks. And it's basically what a short is. So when you short a stock, okay. Now what I'm doing is a little different than shorting, okay. What I'm doing is just putting my money in a short ETF that's leveraged that when the thing goes down, whatever. So a short, which is very difficult. So let's say you borrow coins from your friend, okay? This is an example from Bill Ackman. That's how I explained it. So let's say you bought coins, like very rare coins that cost $1,000 each, okay? And you borrowed them from your friend and you sold them to the market, okay? And then they went down to $500. So you bought them all back up. All those coins right back at $500. Well, what happened was, and you returned it to your friend, well, you just made $500 by shorting. By doing absolutely nothing besides borrowing shares, or, I'm sorry, the coins that you got from your friend, selling them, and then selling them for $1,000. The coin market goes down, so now they're only worth $500 per coin. Then he buys the exact same amount for the $500 each, and then he hands them right back to his friend, and now he's sitting with $500 worth of profits. And that's basically what shorting is. I never had that explained to me correctly, and now I figure out how it is. So that's the best way I can explain it to you. So when it comes to stock, it's basically you borrow shares from the brokerage account, basically from other people, basically, of a said stock. We'll call it Apple. Let's say you wanted to short Apple. I would not recommend doing that. Short Apple, okay, and it's at $174, we'll say right now, and you're going to sell it to the market at $174, okay, and it's going to go all the way down to, let's say, $164, we'll say, and then you sold, okay. I'm sorry, you bought back in because they're a lot cheaper. So now you bought them and then you returned them to the same person that you borrowed them from, those shares to the same person you borrowed them from, and now you just made $10 per share. It's a lot easier. It's a lot harder than it sounds. Okay, do not do that. You can lose a lot more money than make money. I can tell you that. You have to understand what you're doing, and short sellers sometimes I don't totally like because it's like, guys, because you can't always trust these guys, For instance, there's a group called the Hindenburg Group, research company or whatever. They went after Gautam Adani, I think his last name is Adani, the Adani Group. And they were running a Ponzi scheme according to the Hindenburg Group. Now, I'm not saying that this guy that's been in power for so many years wasn't running that. He probably was. Because every country has corruption. He was really rich. He was in bed with a lot of politicians. So, he was probably running a Ponzi scheme. Or not a Ponzi scheme, but like a scheme where pump, and then okay, because that's what a lot of these Chinese stocks do, and XYZ. Not all of them, just certain ones. So, the Hindenburg Group, research company, did one on Carl Icahn's company, and the stock ticker is IEP. And, of course, they made a crap load of money. They also did it on Block, which is a technology company. Um, and again, that went down. What all they do is they do a lot of research about these companies, and they find bad news about it, and then they put it out to the world and hope that they're going to agree with them, and everyone's going to sell a lot of their shares, so then they make all this money. Is basically what these guys do. That's a short seller research company group that does that. It's good, but it's bad. And I'll tell you why it's bad at sometimes. Because you're going to have short sellers that are just shorting the stock and saying it's bad when it's really not. Okay? And just want to make money. And I think that's where the defect is. People that don't understand that, because you're also hurting the company. Like when you short sell, it's not great, you know, because you're hurting the company because all these shares are now going lower, right? Doesn't mean that I don't like short selling. If the company is doing bad stuff, then fine. You should be fighting corruption. But do I think that everything is good? No. You're always going to have bad apples in every situation. I think most of those guys that are short sellers have done, crooked things, I'm not saying they're all bad. No, I think a lot of them have done a lot of good things, and a lot of them have done a lot. And some of them, the same guys, probably did some bad things that were just like, yeah, okay, dude, go crazy. But that's basically short selling, in a nutshell. Okay. I've never done it, so I couldn't tell you how it is. I never borrowed shares to short other stocks. I've done put options. Options are a whole other realm that I could get into, but I'm not going to get into today because that would take me forever to talk about it. So I'm not going to go over there because that's just nuts. And I still don't fully understand it. I understand it enough because I did it and lost a lot of money. It's whatever. You have to learn, keep growing. I don't think I did enough of that, and still haven't done enough of it, I only been in the stock market for 2 years, I should have been in there for like 5 or 6 or 7. But I started late. A lot of people say, oh, you started early. But it's whatever. Whenever you start, it's a good time, Maybe not in the market per se, but it's a good time to learn, another big thing that I'm going to get to, and I know I'm jumping all over the place, boom, 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 boom. This is what you're going to understand. Once I get this thing more structured, it won't be as much jumping all over the place, but to start off, I will be. So I do apologize about that. The next thing is I'm probably going to start talking about is more stocks related. So I guess the next time I can go into is, stocks in particular. So certain stocks that I like personally are a company called SoFi Bank. If you know who the Los Angeles Rams are, so their stadium's called SoFi Stadium. Okay. That's the company. They don't own the stadium. They're just a sponsor for the stadium. They're basically a bank, but they're an online bank, so they haven't made any profit. Their cash flow is negative $7 billion, so that isn't good. But they're close to their book value. They still are over $1 billion worth from their book value, but they're still close. So I think a company like SoFi, for me, I'm not saying you should go invest in this, but for me and my portfolio, I like it. Okay, I like it under $5. Okay, and it got under $5. So I like that stock. It doesn't mean it couldn't go bankrupt, but I like it. Do I think it goes anywhere? I don't know. I think their earnings were good, in my opinion. Were there things in their earnings that were bad? Of course there are. Are there things in the company that are bad? Of course there are. They don't have any cash flow. They don't have this, but they also haven't made any profit yet. It's been whatever. But their profits are going up. So they're getting less negative. So that's good. Am I in early? Probably. But I think I'm good. Okay? I made money on this stock before. Doesn't mean I'm going to make money today or tomorrow, or whatever. It depends. Do I want to buy and keep this stock? Do I not want to keep this stock? I don't know. I like it because there's a lot of stuff. I probably have to do a lot more research in it. But I like it as a trade and as maybe long term if I see there's a potential. And I think there is, but I still think it's still a little ways away. I think I'm early, The other stock I like, which again I don't recommend buying, is Prospect Capital, PSEC. That's the stock ticker. That company is a dividend play. Nothing else besides a dividend play. Okay? Do not expect it to go up $8. I would expect it to go down more money than go up. Okay? Now you're going to say, well, don't you want to make money? Yes. But if you hold it for a decent long time and they consistently have a dividend, even if it goes to 8%, right now it's at 10, it probably, or 11% actually yield, but I don't know if that's true, but we'll say it's at 9-10% yield, which is really good for the price it's at. Do I think it's a good price to buy in? Maybe a little too expensive. And the PE is really high, but it is a dividend play. It's not a company where you're going to be expecting it to grow at all. It's a dividend play. That's all it is. It's not, it's basically just to keep your cash and get passive income coming in every month. That's all it is. I don't recommend putting all your money in it. I don't even recommend putting any money in it. But for me, I like that company because it just pays me every month. And when it doesn't, oh well. I'll get leave and see you later. Hopefully I don't lose a lot. It's not great advice, but I like that company because it pays a huge dividend, and it's been paying it for the last, I don't know exactly how long, but it's been paying it for a while. So, and it hasn't been just 2, 3, 4, 5. I think it's been like close to 10 years. So, 8 years, whatever. I'll make sure I look into that. But to me, that's very important to own that type of stock because you need those type of dividend stocks. To be honest with you, I think the most important thing is not how much your net worth is how much income you come in with. Okay? You could be a billionaire and still be considered poor because you don't have any liquid assets. Now, you could loan against your stake in a company or a stake in XYG, whatever company, but at the end of the day, your stock and your company are going to do X, Y, and Z, okay? And a dividend per share, for instance, for this type of company is 0.72, okay? So that's 72 cents per share every year, okay? So approximately 6 cents a month, per month, okay? I have family members that own that stock. One of them owned it for a while. I'm not saying she's making a whole living out of it, no, because she doesn't put a whole lot into it, but she's put enough in it that makes her a certain amount every month that it's just a little extra income. It's not great, but it's extra income, okay? But dividend stocks, in my opinion, are more important than, you have to make sure that it's the correct company. There's risk to Prospect Capital because they can go under. Or they may get rid of their dividend. If they get rid of their dividend, then the stock, there's no point of buying it. This just isn't. The stock doesn't really move. It moves up here and there, but, it'll move up. It goes in a range. It'll move up, but it's going to go down and up. So, but I think it's very important to own dividend stocks. I would actually say it's more important than growth stocks because Yeah, growth stocks are nice. It depends which ones they are. I'm not saying don't invest in growth stocks at all. No, no. I think some of them you should. If it's a really good company and it's not going to just be like a little fluke here, there, up, down, turn around, and at some point it's going to pay a dividend, yeah, you should probably invest in it. But if you're just looking for income, dividend stocks are the way to go. Don't invest in AT&T because they have too much debt. They have too many company problems. They have XYZ up in the roar, and their dividend's going to shrink. Not saying that Prospect Capital's dividend's not going to shrink, but it's a lot higher than AT&T. Now, someone's going to say, well, if you count in the repurchasing of shares, that also counts in. They're correct. That could count in as more money coming in, but then you have to sell the stock, and then you have to, so it's whatever. But it's just another way to make more income. Okay. I wouldn't buy Comcast, AT&T, Verizon, because all those companies have to change something. They're not changing with the time. So I think they are in some capacity. They're moving more towards 5G, which is fine, but I don't really think they're going to be the big players anymore, and because I think there's a lot of companies going to streaming, and a lot of those technology companies are going to be the big players, and they're not going to be. Netflix will always be there, as a big streaming player. I don't think they pay a dividend, so they're more of a growth. I wouldn't even consider them a growth play anymore, because the problem with Netflix is their moat's starting to go back up, which is very, very good, and they're still the largest streaming platform, I'm pretty sure, but they are getting a lot of competition, and the streaming services, it's going to hurt them, as you can tell. Just like Tesla's, they're going to get hurt, because Tesla there's a lot of other companies that are going to come into space with electric vehicles. And a lot of people say, well, they're more of a data company. Yeah, they are, but they're on their balance sheet, they're not making that much money from it yet, and doesn't mean that they can't, but as of now, they have it like Tesla Solar, interesting. I think they're building some AI robots, interesting, but, it's not enough to bring the company up. The cars are the ones that are bringing it up. So right now, they're still overvalued because of that. I don't think they're a traditional car company, Tesla. No, I think they're going to be more of a, like these guys say, data company. But either way, I wouldn't buy the stock right now unless you're thinking of a quick trade or something. Then maybe. But yeah, I wouldn't buy the stock right now. I think you can get it at a better price. But again, don't do anything that I say. Okay. Another company that is there was a financial company that I actually backed off and was not. I actually backed off and kind of let it go because I was worried about it because I believe it was, and I don't remember the ticker, but it was like, I think this was the actual ticker. I might have said it wrong. CRBG or CBRG, one of those two. It's a bank. So the problem with that company is that they're losing assets left and right. Yeah, they're way, in my opinion, close to being undervalued. But they're losing assets left and right. And it's hard for me to invest in a company that is just losing. You just can't. They made a lot of money, but can they consistently grow that growth with having deposits leaving every single year? I don't know. I would have to look more into that company. So I kind of backed off on that one. I'm going to share in Schwab. I wouldn't invest in it right now. I mean, unless you're going to cost average down, then maybe. Which I guess you could say that from the video, but I think you could get a better price from the video. I also think you could get a better price for Schwab. The other risks that Schwab has to play with is they do have some crazy things that could be iffy. so I don't know. But I do like that their executives are repurchasing shares for themselves at higher prices and some higher prices than I bought. So I'm okay with owning it because it also tells me, well, yeah, I could lose money, but the executives are also going to lose money. So I doubt they're going to play it that. They're going to try to play it better, in my opinion. Doesn't mean that I think the executives did a fantastic job. I don't think they did. But, I think they know more than Joe Schmo on the corner, right? So at least of their company, hopefully. I don't know. But they're also $8.3 trillion worth of that, or I'm sorry, over $7 trillion worth of assets. So I find it hard to believe. I think they're kind of a too big to fail type of company. Doesn't mean they won't fail, but I think that people will step in and keep them afloat. Doesn't mean they won't go down to $10, but I still think they're a big enough bank and brokerage firm that they're too big to have them fail. Do I think they're undervalued? I think they're getting close, but I don't think they're there yet. I think at $40, they're probably there. If you want to invest now, I think you could, and you probably could get a deal. But I think they're still not. The revenue and profit don't really correlate to say, oh, they're a great stock to buy, or I'd be pouring more stuff into it. I should have bought at 45. I didn't because I got close to that, but I didn't. The good thing about that stock is it seems like it's not going past the 45 one. So, I don't know. We'll have to see what happens when most of the market keeps going down. But I think that one's a little bit of an overreaction right now to all the regional banks. They do have some risky securities that they bought, different asset classes that they bought that could hurt them. I just don't remember what they're called. I have to look more into that one. But they're definitely interesting. But again, I would have to look more into it, So So Schwab's is just really a play that I'm just playing with and seeing what happens. Right now, I'm losing a lot of money, percentage wise. So, but it's whatever, I bought it at like 56 or something. It's down to 40, 50, 49 or something. So, it's not great, but it's just to see what happens. The other companies I like are metaverse companies. But the reason why I didn't buy into any of them because they're just so overvalued. Unity, overvalued. Well, Meta right now is overvalued. I personally believe they are. I honestly think you get a better price for them. I think you probably honestly close to 250, 270, 280 where I bought it. I'm sorry, 180. I'm sorry, 180, 170, 150. But I don't know. I mean, I don't know where the stock's going to go. It could possibly continue to climb, but if the market starts to go down, then it's whatever. It seems like why the market isn't totally going down right now, or it's only going to make a short pullback, is because we haven't really had. Well, first of all, unemployment was yesterday. Okay, the unemployment data was really, really, really good. In the meanings of it was the lowest it's been in 54 years at 3.4%. So it's not good for the Fed, but that's still, and the jobs reports are lagging data. Okay, so once that report comes in as 4% of unemployment, then things could change. But right now it's still at the lowest, so I think that did help the market go up. But I really think Apple earnings on Thursday pushed the market up. Apple earnings were beat on most of the metrics besides like two. One was services, but again, those are considering from expectations. Apple's expectations are so low, okay? Plus, they don't give guidance, okay, because they don't really have to. They're the largest company in the stock market, and people are still going to buy them because they are the largest company in the stock market, and they pull companies down when they go down. They pull companies up when they're going up. So, they don't really have to do that, okay? But if you look at their earnings year to year, they're actually down if you count inflation in it. So that isn't good, in my opinion. But their expectations of their earnings are very, very low. Like what they're expected to make to what they actually make are very, very low. So if they rose them a little bit, they probably wanted to beat, but, they're still making money. Don't get me wrong. Plus, the other thing was they also added in a $90 billion repurchasing of shares. So a lot of people are going to be like, well, yeah, let's buy this thing. So that was the other problem. Pushed up their dividends, which makes sense. It's Apple has a lot of cash flow, but also Apple has a lot of problems when it comes to explaining why their earnings were not year to year. Now, that may be because of inflation, and their other problem is they just are, in my opinion, they're just overvalued, So their company doesn't have problems, not at all. They probably could tweak some things here or there, but they don't have problems. Like, their problems are more on the stock itself has problems. It's kind of overvalued. Their trajectory doesn't look too great. So, no, I think Apple has a lot to go down and not a whole lot to go up right now. I think 144 is probably their target from what I've seen on charts. Doesn't mean it's going to get there. Doesn't mean it won't go lower. Doesn't mean it will ever get to that number again, of course. But, that's still a steep decline. It's like from 174 to 144 is, let's try to do the math here. It's like $30 down. So, that's a steep. I can't do the percentage. I mean, that's probably not great. It's probably like I don't even know. I have absolutely no clue. But it's probably over 30%, we'll say. Nah, maybe not. Nah, probably not. It's probably like a 5 to 10% range. So, yeah, I mean, it's not great, but, you have to do what you have to do. Might only be 2% down, which is still not bad. But yeah, I mean, I wouldn't recommend buying them at these prices unless you're willing to wait 10 years, which you could be, but you're going to be breaking even. So I don't really think, maybe not break even, but you'll only make a certain amount. If you're trying to beat the market by making like 12, 30% or something, yeah, I wouldn't buy it at these prices, not at all. I just don't think Apple has it right now, So, in the way of like, why would you buy a stock that, in my opinion, and a lot of people's opinion, is overvalued? Unless there's a trend that's moving, which sort of is, but I think it's going to break back down. So, it's just me. I don't know, but that's really what's going on in the stock market. Totally. There's some stuff here and there that you could look. The oil sector is very, very interesting. A lot of those companies are undervalued. Even with their astronomical prices that they're worth of the stock, they're actually undervalued. The reason why I don't really touch these companies is because a lot of them are hard to see them continuing to grow their profits and revenue. or match it for me to be willing to buy their stock. So I don't know if I would be willing to touch oil companies right now. Maybe if they get lower. Some of them are interesting, like natural gas, or NRG. That one's interesting, but the problem with NRG is they have a lot of debt, and their cash flow actually went down. They may have to get rid of some of their dividends. They're making a whole lot of revenue, but not a whole lot of profit. So, which is not great. I don't know. I think energy has potential to grow. At this point in time, I'm not invested in it. If I see that it's better at once it goes under like 30 and we get to like 29 or something, maybe. But I don't. I mean, you're now just like kind of middle school in it, because right now it's at like 31, 33, whatever. So now you're just like counting numbers, but those numbers do count. If I'm only buying one share, then it's not that big of a deal. But if you're buying like 10, those numbers count, because you can make a lot more money that way. So, no, I don't. I think energy is not a buy right now. I think there's still problems with the company that are iffy. Like, for instance, why did you lose money on cash flow? Debt, I guess. One of the other ones is OXY, which I haven't looked at recently. That was one of the ones that Buffett was buying like crazy. That one went down a little bit. I haven't recently looked at it, so I couldn't tell you what it's doing right now. Probably the next videos I'll probably talk about that one. That's I can't ever say them. But it's a petroleum or something. Osanity. I don't know. I'm gonna let you know. I can't pronounce words, so let me just explain that one to you. I can't pronounce words, but I'm gonna try my best to pronounce it. But that one's interesting because they're valued decently well. Their stock is. The company can pay their debt off. I've watched a couple of videos where people have shown like their debt and everything, and they still have dividends they can pay. So that one's interesting, and I think they could make more money. So that one might be one of the ones that could be interesting. Another one is that Alaskan company, Conoco Phillips, I think it's called. I think I probably spelled it wrong, said it wrong, I meant. That one is very interesting. Because in 2027 they're going to get an $8 billion infusion of are allowed to make this big oil drilling and bring down from Alaska down to the rest of America, and I guess the world. The problem is that it's going to hurt a lot of wildlife, and I'm not getting political here, but why Joe Biden signed that, in my opinion, is kind of like weird, because he's the same guy that says he likes to support climate change and X, Y, and Z and all these climate change shenanigans. Well, then why did you do that? You have to listen to their actions, not their words. So it's a little weird. So he says he doesn't really like oil companies, but he's actually helping oil companies, especially with all this. And this is not political, this is just what's happening, right? So he's helping a lot of oil companies by not having us drill as much, because there's an energy crisis and they're making record profits because he's not having us drill, or we would have less stuff. Now, some people are going to argue, well, there's probably not as much oil in the ground. That definitely could be true. I don't know. I haven't done the research, but, I find it hard to believe. Saudi Arabia has lots of oil. Still. So I mean, and the Middle Easterns really do. So that's a whole other subject, but we're not going to get into that. But I think one of the bigger things are, you know, the debt limit is still coming up. I think the House passed a bill a couple of weeks ago or a week or so ago about increasing debt limit by like $1 trillion, which really won't do anything. But that's also passed the House. I'm sorry, the Senate. I think it passed the House. So I don't know. I just hope that the entire economy doesn't, or not the economy, but I mean, yeah, it'd be bad if the entire economy implodes. But let me explain something. When the debt limit is still going up, that isn't good at all. And people will say, yes, it's good for society. Well, maybe if you're just trying to get more stuff. Like, for instance, if you're trying to buy a brand new car, then yeah, you want the debt limit to go up because you want to be able to buy this brand new car and have all this other, and have a job and X, Y, and Z. But in the long term, it's not going to be good because you're not going to be able to have that car, because at some point, the debt limit is not going to be a debt limit. It's just going to total out collapse. So, do you want it to collapse now? No. But do I think they collapse now? Well, that's why they have inflation going up, because that's the only way they can keep the debt limit down. Plus, and this is where the dollar comes in. So when the dollar is being traded by all these other countries, we don't have to trade in our own dollar. We are the dollar, so we don't have to trade in any other currency to trade things. So in ethical terms, we don't really have to pay our debt because we're not transferring our, currency to a different type of currency, a more expensive one, or whatever. I mean, we still are paying our debt off. We have to, but it's a lot easier for us to live, basically, is what I'm trying to get to. So to be honest with you, I don't know what's going to happen, okay? I'm just a regular guy that is here talking to you. So I don't really know what's going to happen, but all I know is this, that at some point, us as a society, I think maybe could get a little better. But I think our society is changing for the worse, and in some aspects are actually changing for the better. So it really depends on you all and me and whoever else to change the world for the better by helping it, putting more ideas in the world, and just changing it, But that's all I'm going to say here today, and we're about to get to close to an hour here. So I'll probably speak for maybe a minute or so longer, and then I'm probably going to hit off. But one of the bigger things that I have to, I'm going to continue to say is, we have to get the world to become a better place. If that's basically kicking people out of the government, then we're going to have to do that, because the government is really corrupt. Again, that's a whole other subject. But that's what we really have to look forward to in our society. So it's up to you. It's up to all of us, even including me, to change society for the better. I think freedom's more important than being controlled by the governments. And I've heard a lot of situations and stories that, if we didn't have the governments, we wouldn't be as well statued and whatever. I think the governments are good for protection, but they're not great for freedoms, because they just people that have been in, it's not even really the government, it's more the people that are in government that have been there for so long and have done absolutely nothing besides full out corruption. You know, you're always gonna have corruption, you're always gonna have power, you're always gonna have greed, and everything. So you're always gonna have that, but it's just gotten so bad for the same people, and I think there's gonna be a change soon, and